Darin Newsom from DTN is our marketing analyst this week. Corn and soybean markets saw favorable finishes Monday and Tuesday. Wednesday showed mixed results, and Thursday featured the USDA's latest supply and demand report. The agency estimates new crop corn ending stocks in the U.S. at just less than 1.96 billion bushels. It cut production by reducing harvested acreage by 400,000 acres, but leaving yield at 156.5 bushels an acre. The report projects an increase in new crop soybean ending stocks to 295 million bushels. U.S. 2013-2014 wheat production was slashed by 83 million bushels to 576 million bushels. We talked with Darin at DTN's offices in Omaha Thursday afternoon.
My initial reaction is I'm just glad they're over. During the quarters, at the end of the quarters, you usually get 3 reports in the span of 4 weeks, and we've just gone through that here this summer. And for all the nonsense that's attached to these reports, to all the hype that they bring, it's just nice to have them out of the way. Now we'll get back to trading weather. We'll get back to trading other things besides some what usually turns out to be fictitious numbers.
Let's start in corn and just talk about the overall supply. Do you think there's enough to go around before we get to the new crop?
Since we have no export demand at this time, we'll probably make it through. I know the market was counting on an early harvest, predominantly in the southeast. It's just simply not going to happen because of the spring and summer weather, regardless of what USDA has said in the past. Crop conditions are not some of the best that we've seen in years. So I think that we're going to be able to get through this market. I think we're going to be able to get through this marketing year, but supplies are going to be very tight. At least usable supplies are going to be very tight. And so I think we're going to continue to see a stronger basis. I think we're going to continue to see the cash market well supported.
You mentioned crop conditions. Corn and beans, what's your confidence level that this is going to be a big crop?
Well, I mean, it's going to be a big crop because we do have large acres. There's no getting around that. Now, we don't know how many were actually not planted. We're certainly not going to know that through any report. So we're going to have large crops. Will they be as large as what's being projected at this point? Possibly not. I still don't think, again, all the acres are being taken into account, and I don't know that yields are going to be quite as strong as what's being projected at this point.
Big enough that when someone says $3 corn, $4 corn, you feel okay with that?
No, I don't think we have. I don't think the ending stocks, the real ending stocks for 2013-14 are going to be to the point that's going to push us down into the $3 corn. Now, what could happen is if the investors all get up and leave, like we've seen here over the course of 2012-13, if that continues, then yes, we could get into the low 4s. But fundamentally, I don't think the rationale is there. I don't think it's there.
In August, we'll see the numbers from the resurvey on soybean acres in 14 states. What's your expectation?
I have none. I mean, these numbers could come in anywhere. Right now, if I look at what the market's telling me, they don't believe that the acres or the crop is there. I mean, we've only got a 4.5 cent carry between the November and the January contract. That's very small. That's indicating that the commercial side of the market's really concerned about supplies next year, really concerned about continued growth in demand. The bottom line is they think the situation's far tighter than what USDA is going to say, and so I don't really know what USDA is going to have in its August acreage number. I just know the market doesn't think it's enough yet.
Is there a recommendation on positioning yourself before or after, not touching it at all?
Right now we're kind of sitting back. We haven't done a lot of contracting. It looks like the market wants to try to put in its seasonal rally. We usually see the markets rally a little bit during the summer if we have any weather issues at all, and certainly we could. This is going to help push the market up. It's going to give us some better opportunities to go. Now, in front of the report, we'll have to kind of get whether the temperament of the market has changed a bit. Maybe then we start to put some more positions on. Right now, we're going to sit pretty open.
Based off all the things we've been talking about, the users and how much they need, how aggressive would you be if you still had some old crop corn left?
Old crop, I'd probably be a bit more aggressive. I do think the old crop market's going to stay well supported. The problem is both corn and soybeans have run so far here through the early part of summer. We've had very strong basis levels. We've actually started to see them weaken a little bit, national average on soybeans. So, if you've still got some sitting in demand, start feeding this market. It's what it's telling you it wants done. So, probably time to start feeding some of these old crop bushels, getting rid of them, starting to focus more on the new crop.
Even soybeans, or do you think that there could be a summer run in there?
I still think there could be a summer run because in both corn and beans, I want to sell a little bit at a time, but there's no way that we're still sitting really with 125 million bushels ending stocks, which is what was said in the July report. I think it's far tighter than that. We're probably well below 100 million bushels. We'll never see it officially, but I think that the stock situation is far tighter than what's being reported now. That's going to continue to support the cash market.
How do you look at 2013 pricing opportunities?
2013, I think we're going to have an opportunity again this summer. Again, as with corn, weather's going to be the key. I think we're going to move into a time frame now where we're focused on weather and we're not so worried about what the USDA is going to say every other week. So with that in mind, we don't have an ideal situation. We're still coming out of a spring and summer that were not ideal. So I think the new crop markets also have an opportunity to move a little bit here in the summer, possibly setting up some better, getting close to some of those highs that we saw earlier that would provide some selling opportunities.
Does anything in 2014 look beautiful to you?
Yeah, one thing we're going to want to get some 2014 on the books because in the long run, I still think the tops are in these markets. I think we established the highs in 2012. The whole structure of the market seems to be shifting, seems to be changing, not quite as bullish as it used to be. So we get another nice run in the 13-14 market, and it pulls the 14-15 new crops with it. I think we're going to want to take a look at getting some of that on the books as well.
I'll finish in wheat. What are you seeing the numbers that are coming in from the harvest right now?
Right now, the harvest numbers were actually a little better than anticipated, but out in the western southern plains, they're just deplorable. I mean, anything that wasn't irrigated barely had enough wheat to cut. So USDA kind of reflected that today. They did up the overall average yield a little bit. Some of that was due to the better than expected winter wheat, and also we had, a little bit better expectations with the spring wheat. So I think any rally that we see in the wheat market is certainly going to be muted by the fact that we're not in a tight supply and demand situation. But they did increase export demand, which certainly seems to go along with what we're seeing in the market right now. So if we can start upping demand a little bit, that could start to help wheat, at least give it a little bit of a push here this summer.
Where's the next volatility that comes in any of those three commodities? Is it a next USDA report? Is it weather?
No, weather. We're certainly in that time frame, but I think the kind of the unknown right now is what's going to go on with the dollar. We've seen the U.S. dollar index fall hard since the release of the June Fed meeting minutes, and that's on the idea that maybe we're not going to see these bumps in interest rates that had been anticipated just a month or so ago. That's really been pushing the dollar higher. So if the dollar starts to come down, we're going to start talking about inflation. We've already seen gold move. We've seen crude oil post an incredible rally here the last couple of weeks. Grains could follow, particularly those grains that still have some supply and demand issues, corn, soybeans to be in particular. So I think there's some opportunity here. So some of the volatility is going to come from outside sources.